All right, all right, all right. Good afternoon, good afternoon, good afternoon. Welcome to today's live stream podcast with Vbit Technologies. My name is Gersham Folkart, as most of you guys know. I'm sitting right next to a Vice Chairman, Mr. Jingao, and in the background, handling everything, the master of the flex capacitor, Mr. James from California. So, hope you guys have a great weekend this weekend. We're still on the lockdown phase, but I think things are starting to ease up a little bit and hopefully get back to normal soon. I hope you guys are a little antsy to get out there, I know, but a little bit longer, we should be back to somewhat normalcy. What's things like right now for you guys in California, James?
Everybody's wearing face masks, I'll tell you that. It's kind of trippy to see. It's almost like we're living in a movie or something. You go to Lowe's, you go to the grocery store, you go to Costco. It's now a law. To what extent they enforce that law, I don't know. But it's a requirement for everybody to wear face masks. And I think one of you guys mentioned it on the past podcast. I don't think our generation is ever going to forget that this happened. Like, this is the new normal now, and it's just fascinating absorbing it all.
Yeah, it's funny. I was saying to you earlier how back in the day, not even back in the day, not too much longer, you would see all the countries in Asia and you see them wearing face masks and stuff like that. And it looks so different. And this is something that we never, thought would happen here. But here we are, I think that's going to be the new normal for a very long time. We're going to see people wearing face masks because here in Philadelphia, it's actually mandatory. You go to certain stores and you cannot get in unless you're wearing a face mask. You go to the bank, you can't get in unless you're wearing a face mask. So it's going to be the norm for at least for the next, I'd say 6 to 18 months, probably, right?
Right. And the funny thing is, I know a few months ago when we were in Arizona and on the way back, we were thinking about wearing a face mask, but there's only a few people wearing a face mask, so you don't want to feel kind of weird, putting a face mask on and no one else is besides a few people. And now when you go out, you have to wear it. And when before that you have to wear it, like I'm talking about maybe last week when you're not required to wear it.
Yeah.
But most people have it, so you feel weird.
Wearing it.
Yeah, you feel weird. You feel outplaced when you're not wearing it. Right? And now, of course, it's mandatory when you go to any stores. Any inside commercial place, you had to wear it. Now, of course, you have to. So, yes, so it seems like now is the new norm.
Yeah.
Right. And so that's kind of scary. And we're drinking Corona somewhere.
Yeah.
Somewhere it's a happy hour.
It's a happy hour somewhere.
It's 5 o'clock. Well, actually, it's 5:45 right now.
So I think people are starting to get kind of used to the whole face mask thing. In the beginning, I was a little bit apprehensive to wear because it's just something that I was used to. But like you said, the more I go out and try to do certain things, I go to the store and things like that, when I realize that, okay, I'm going to have to wear this thing because I can't go to the store, I can't, go to the bank. And so, yes, in the beginning I was happy, but now it's like, okay, I'm going to go out, I put it on. It's kind of like you get used to those things. So, and the new norm.
Right. Now I just lost my train of thought. Right. So yes, then let's get back out. Just a brief update. So I guess in the U.S. we have about almost 1 million confirmed cases.
Yeah.
Right. And you said earlier about 60,000, 40 or 60,000.
No, almost 60,000 deaths.
60,000 deaths.
Almost, yeah.
All right. So that's no joke. And of course, Philadelphia, we're still in a lockdown. Well, Pennsylvania, we're still in lockdown to May 8th. And most likely, Philadelphia probably will be extended. Most likely will be the last county or last city to be to back to normal or open for business in Pennsylvania. Right. What about California, James? When is your lockdown or estimated to be over?
Well, I know the wife who works in San Francisco downtown, like Embarcadero type area. A lot of the companies down there, Salesforce, she works for Silicon Valley Bank. They're resuming May 17th, which is in a couple weeks now, like 3 weeks or so. I think a lot of companies fall in that category. But with that said, there's a lot of businesses that are open in some capacity now. They're just having to get creative as how to pull it off.
Okay.
Right, and that's what's gonna be like. Even when this thing opens up, when the economy opens up, yeah, a lot of these businesses have to adjust and really be creative on how they do it. Like a lot of my clients and friends, they're restaurant owners, and they were asking me, would I go out to eat after this is over? I probably would, but not to the extent that I did before.
Yeah.
Because I'm really dying to go out to really dine out.
Yeah.
Right. Actually, let me take that back. Maybe dying, it's a bad word to say. But,
You want to eat? You want to go eating out, right?
Right. But I'm looking forward to it. So, but definitely it's going to change. I definitely won't go out as often, especially to crowded restaurants.
Yeah, absolutely. I think right now the restaurants are being hit really hard.
Mhm.
But even when things are somewhat back to normal, I think the restaurants are going to struggle for a long time because people just won't have the comfortability, won't feel comfortable
Right.
going to a restaurant, sitting there with other people around you, right next to you and things like that. So, yeah, I think the restaurant industry may be one of the last one to really recover from this. And, like I was saying before, I think a lot of small restaurants that we used to go in, like neighborhood restaurants and stuff, I think a lot of those restaurants would not open back up because I don't think they had the cash flow to, kind of carry them over through this, past couple of months or so.
Right.
So unfortunately, I think the restaurant business is going to be hit really, really hard out of this. Even some of the bigger chain restaurants, like we were talking about the other day, Cheesecake Factory and stuff, they pretty much stopped paying their rent. And, I'm not sure, if they're going to be out of business, maybe not. But, if they're feeling a pinch to where they can't pay their rent, just imagine what the smaller restaurants are going through. So,
Right. So yeah. Anyway, so let's get back to something more cheerful and more exciting.
yeah.
All right, and of course, that's our main thing. It's Bitcoin and the crypto market. James, I see on Facebook you have the chart up. You have the Bitcoin price chart versus, is it the S&P at the bottom?
That's right. Yeah, this is a YTD of Bitcoin versus the S&P. So the top green line here is Bitcoin, and then below it is the S&P index.
Okay, and I see our video actually is right covering that chart.
I can adjust it for you so we can see it.
Yeah, can you adjust it? Right, so people can see the whole chart. All right, so by the way, we are live on Facebook and we are on Zoom and also on YouTube. All right, Facebook is the best way, so you can chime in, please. Say anything that's in your mind, please let us know, and anything that we can address, then we would love to. All right, so the of course Bitcoin has done pretty well over the weekend.
Yeah, I was actually real impressed, and I think we're going to see a really strong move towards 8,000. So 8,000 is going to be a very, very strong resistance point. And so a couple of things may happen. I think it's going to test 8,000 resistance and maybe pull back from there. In my opinion, if it breaks through 8,000, then I think it's going to be off to 10,000 before, for the next pullback. So 8,000 is going to be a really, really good test for this move right now to see if it's a real move or it's a fake out. If it doesn't break through 8,000, I'd be okay with it because I'm not sure, but I think 8,000 is going to be a really, really big test to see if it can break through or not. What do you think?
Definitely, 8,000 is definitely the resistance there. We break through there, yes, we're going to get to the 9 and the 10s. And I still hold true with our earlier prediction, okay, for the end of the year. In the beginning of the year, we say at the end of the year, Bitcoin probably double in price, right? I think we started at the beginning of the year around 7,000, right? And then which means around 14,000 at the end of the year. And it happened a couple of times. Whenever the halving happens, the Bitcoin price usually doubles from the beginning to the end of the year. Right? It happened twice already back in 2016. And of course, 2016, you have that's
2012
and 2012.
Mm-hmm.
Okay, so that's 2 times. Now this is the 3rd time that the Bitcoin happened, and hopefully 3rd time it will be a charm as well.
Yeah,
right. They'll double, and you can see it pretty much recover. Actually, for Bitcoin year to date, we actually gained a few percentage. Right? Bitcoin, started around 7,000. Now we're above 7,000. Now it's 7,700. It's 7,757 right now.
Mm-hmm.
Right, and the S&P still did not recover yet. The S&P actually is still down a few percentage. I'm looking at it. I think the S&P is down. Looking at just estimating from that chart, roughly about 10%. Right, you have between 0 to -20, so right in the middle. So roughly about 11-12%. The S&P is down, right? Whereas Bitcoin is roughly up about 5-6%. Just estimating from that chart.
Yeah.
Okay. A very interesting question that I get. I get most of the time actually is when does Bitcoin start to decouple from the stock market? Right, decouple meaning move in different directions. Mm-hmm. As you have seen, it's since this pandemic, right, or right at the beginning of this pandemic, it's starting to go in the same direction. Right, whereas Bitcoin and the stock market are moving in somewhat the same direction. If you look at the chart in the beginning of the year, Bitcoin's been outpacing, been going up. Actually, I think it went all the way up to the high of how much was it? What was the high?
How long ago?
The high for this year. Let me take a quick look.
Top of my head, I don't remember. I think it was over 10,000.
Yes, it was. All right. And of course, it had dropped down. Right. Yep. It did go over. Actually, almost hit. It was 13. Now that wasn't this year, right? But as you can see, it started going up and actually doing a lot better in the stock market. And then when this thing happens, it crashed. You can see it. You can look at it right over here in like June 16, or actually, I'm sorry, March. Mm-hmm. Where March 10, 11, where it crashed, right? Where Bitcoin actually
went down to like 4,000 and change. Yeah,
and March 16. Right, so actually moved down a lot quicker than the stock market did. Mm-hmm. And then of course we rebound a lot better. And that's the thing with Bitcoin. It is a little more volatile. All right. I see our image kind of froze. Is that me? Oh, I think
it's good on this end.
Okay, yeah, it's me. I think I pressed the wrong button. All right. So with Bitcoin and any new technology, and that's why for us it's such a great opportunity for us right now. Bitcoin, it's only 11 years old. 10 to 11 years old right now. And the volatility, yes, it's still there. Right? It recovers faster if something goes wrong. Yes, it goes down a lot faster. All right. But that's where the opportunity is. And when does it start decoupling? Right? To me, I think it'll start decoupling once, like you've seen before in the chart. Once the economy starts to stabilize a little bit, once we know where we're going, when this thing is over, then you're gonna see. I believe you're gonna see Bitcoin will start even outpacing more. Right? Bitcoin will be leaving the S&P in the dust. Mm-hmm. Probably keep on going up. Where S&P might still continue to have a big issue. It might continue to stay flat, and I think it might even go down even more. Okay.
I agree with you. Okay, so I think many people are thinking that the S&P and the market overall was going to have a V-shaped recovery, and I don't think that's going to be the case. We may have something more like a W. In other words, we come down, we may bounce up, but we're going to have another leg down before it goes back up again, right? And then I think, yes, eventually Bitcoin's going to decouple, but not right now. The reason why I say that, because a lot of the money that's been printed, the quantitative easing and all of that, a lot of that money is going to eventually find its way into the stock market. Right?
Right.
And so when that happened, it is going to drive up the price, the stock market, so to speak. But the thing is, what many people always make the mistake and not realizing that the stock market is not the economy, right? And so we may very well see the stock market going back up, maybe even get to new all-time highs, while we still have, people having a hard time finding work, a lot of unemployment, because what goes on in the stock market doesn't necessarily reflect what's going on in the real economy. Okay, so we may see a lot of this money find its way into the stock market. It's going to drive the stock market eventually, and so you may see it and Bitcoin kind of like head to head, but eventually, once people realize that the dollar is now losing a lot of its purchasing power and a lot of its value, right? And then once all this money printing, the effects start to come home to roost, then you're going to see more people pretty much shifting into Bitcoin and gold. And then both of those are going to go up together from the stock market. And then eventually Bitcoin is going to decouple from gold and be, to me, the standalone store of value, and in terms of the wealth effect. So that's kind of how I see it. It may play out that way, it may not, but yes, it will decouple, but it's going to take a little bit of time for it to play out.
All right. I mean, when we say decoupling, it doesn't mean that the inverse relationship, whereas Bitcoin goes up and the stock market goes down. I think stock market right now, it has been down. It is down, but at the end of the year, I think it will be still somewhat like over here where we are right now, right? But like my earlier prediction, I do believe the Bitcoin end of the year, yes, definitely above 10,000. Right, I'm still highly believe it will hit around 14,000. Okay, end of the year.
By the end of this year.
Yep.
Now, speaking of price, James, can you pull up the first article that we talk about? The one from the former Goldman Sachs hedge fund guy.
Yeah, I think it's on. Yep, he put it up on Facebook.
Okay, so that article came out, and the person that put that up. Well, I saw him. I've been watching him for a number of years now in different interviews. He used to work at Goldman Sachs, and then he left Goldman Sachs and started running his own hedge fund. Very, very successful hedge fund guy, well known in the financial community. And he has a prediction, based on his analysis. He's a big time Bitcoin supporter. And he was saying that, look, in the next 3 years, he could easily see Bitcoin being $1 million. And now for me, in the beginning, like a few years ago, when someone say that, as much as I loved Bitcoin back then and I supported it, I was a little bit skeptical. I was like, man, but the more I'm involved in the space and the more I see what's going on in terms of the currency, the money printing, everything that's going on right now, I can actually see where that's definitely, not only is it possible, but it's probable that Bitcoin will get that high in price. As a matter of fact, another multi-billionaire guy, I can't pronounce his last name. His first name is Shamat. And he was on an interview the other day, and he said, look, Bitcoin is going to be, it's going to be a binary result. Either it's going to be worth millions or it's going to be worth zero. There's no way in the middle. And so, when I hear these hedge fund guys, these multi-billionaire people that's been in finance, very wealthy people that's saying, look, based on how Bitcoin is designed and what's going on right now with our monetary system, then yes, I could see Bitcoin being worth multiple hundreds of thousands, if not millions of dollars.
All right. Let's see. I think there's two different articles that you have, Raoul Pal and the Boomer generation. And
so I sent them two different articles.
I see. Okay. I'm optimistic. Also, I'm very optimistic and bullish on Bitcoin. $1 million. I wish. I don't know if that's possible.
We always right.
By 2025, hit 1 million by 2020. I wish it will.
Yeah.
Now, is it probable? Is there a probability? I think so.
Yeah.
You know, I think there is a probability. I was just reading an article on in Africa. Actually, they just started an app that you can easily use Bitcoin, where it's kind of like a Venmo. Almost they're using Bitcoin. There's an app that you can use Bitcoin like Venmo, just using the telephone number. Which actually that's our wallet. Our wallet can do that.
Yes.
You know, our Kabu wallet, our Bitcoin wallet. We can use phone numbers and member ID numbers and transaction free between our users. So they have a wallet like that in Africa, right? And they did a study. Africa, there's only 1.2 million people in Africa have Bitcoin. Right?
Okay.
All Africa.
The entire continent,
the entire
1.2 million people have Bitcoin.
Right.
Okay.
And the total population of Africa is 1.4 billion. The total continent.
The total continent. Okay.
All right. So what's the percentage? What's
the number? Very
number?
small percentage. I don't know the exact percentage,
right.
But 1.2 million of 1.4 billion. That's that's a very, very small percentage. Wait, you're the Asian guy. I should be asking you.
Pretty much like 1/10 of a percent, right? Yeah, 1% of a billion. 1% of the billion is what? 10 million. Well, if 100 million, 1% of 100 million is 1 million.
Yeah.
Right. So yeah, 1.2 million of 1.4 billion. So that's only 1/10 of a percent.
Okay.
So that's just Africa. 1/10 of a percent of people in Africa have Bitcoin. Right. So just imagine the percentage growth.
Yeah.
Right.
Yeah.
Imagine there are 10 million, 100 million people that have Bitcoin.
Yeah.
What's it gonna be like?
It's that. So that's what I'm saying. So when I hear someone, and these guys that's saying this, these aren't some guy that just walk off the street. These are very successful, wealthy people that's been in finance for 20, 30, 40 years, right? They have a reputation at stake. They're not just saying it just because they want to get attention.
Right.
What they're looking at is how Bitcoin is designed and what it was designed to do as it relates to what's going on in the overall economy, in the global, not just the economy, but we look at the geopolitical atmosphere, what's going on around the world, and you look at how Bitcoin is designed, you can see where in the next few years, Bitcoin is going to be worth, if not hundreds of thousands, millions of dollars. And, these, like I said, these guys are like Shamad. This is a guy that, helped, was involved with Facebook and, run a big hedge fund in Silicon Valley. And the thing is, the more time you spend in this space, you realize how beautiful Bitcoin was designed. I heard someone over the weekend said when they read the white paper, the guy that's Jack Dorsey, the guy that's CEO for Twitter, he said when he read the Bitcoin white paper, it was like poetry. And he's a big time Bitcoin guy. He's really big into Bitcoin, right? And the thing I was saying to you the other day, how the halving is brilliant. It is brilliant because whoever designed Bitcoin, whether it was one person or a group of people, whatever, it's almost like it was timed to where as more people get involved with Bitcoin, as it becomes more mainstream,
right?
It reduces the amount of Bitcoin that's available.
The supply, what comes out limits.
It is absolutely brilliant. The more popular it gets, the more demand for Bitcoin, it reduces the amount of Bitcoin. Right. So therefore, it has to go up.
And also, why they started Bitcoin, right? Bitcoin, it was an ideal. Right? Bitcoin was actually, it was an ideal technology that Nakamoto Satoshi, either him or these group of people, right, that come up with. It came after the 2008 right, financial crisis. It came after that, right? And right now, where we are right now, right now, a lot of people say this. After this, there's going to be a crisis that's going to be even worse than the financial crisis of 2008.
Yeah, absolutely.
Okay?
Yes.
So we had the Great Recession back then. Now this is what we're going to face is between the Great Recession and the Great Depression. All right. So that's where we're going to be in the next few months. All right. Now, also with Bitcoin, the idea of Bitcoin is to take control of the government, out of it. To have people like us, the average people, the normal people of the world. That's why they call it the people's currency. Bitcoin is the people's currency, right? So all these bailouts that these governments are doing, all these trillions of dollars and helping out the banks, and it's going to happen again, helping out the airline industry, helping out probably the banks too later on, helping out all these companies, right? That just keep on putting out money. But whereas Bitcoin, it's controlled by us. There's no more Bitcoin coming out. Another reason for the Bitcoin is and we talked about Africa earlier, is really to help those other countries, the countries that do not have a good financial system, that do not or any financial system at all. Right? There are many people that are unbankable because there's no bank in those countries. Right, we're talking about a lot of African countries and plus the Middle East, where all these wars that are going on and all these regimes that change overnight. And these two things, that's what Bitcoin is for. And that's what's happening right now. There's another crisis right now we're facing, and those countries, we talked about. All right, that's real developing apps for those countries, make it easy for those countries to use Bitcoin. Right, so we just talked about, yes, only about 1 million people in Africa use it. Just imagine it reached to that 1%, to that 5%. Right, and especially for those countries without a banking system, it will grow once there's a technology out there that can easily for them to use. Right, that's friendly to use, easy to use, like Coinbase for us. Right. Yeah. And Kabul, of course.
Absolutely, right? Kabul.
And Kabul is
everyone should have everyone should have a Kabul wallet.
All right.
Everyone should have a Kabul wallet.
Right. If the Kabul wallet goes to the countries like those that we talked about, all right, we can grow that 0.1% to 1%, 5%, 10%.
Yeah.
And that's when those numbers that you talked about is going to be crazy, right?
That's the reason why when I hear those numbers, I'm not taken aback anymore by those numbers. They don't scare me anymore because I see where that's definitely, not only is it possible, but it's highly probable that Bitcoin is going to get to those numbers. Now, speaking of government, so we talked last week how the Chinese government they were in development of their own digital currency, right? And so now it's out and it's going through a beta testing phase. So right now, McDonald's and Starbucks and a few other companies in China is testing China's own digital or somewhat cryptocurrency, but it's not a true cryptocurrency in our eyes, right?
Right.
But nonetheless, it's here and it's been tested right now. So, what are your thoughts on that? How do you feel about that?
A couple of things, and that's a good point. Actually, a lot of our members brought that up, and for some people, that's some people think that might be a threat to Bitcoin, right? When governments step in and to have their own cryptocurrency or so-called cryptocurrency or the digital currency and their own fiat currency, and also China not just going into digital currency themselves, they're also having their own blockchain network. They're also developing their own blockchain. Right now, the currency first for their digital currency that they're working on, and Facebook's been working on the Libra coin for the past few months, past year, right? I don't see it as a threat. Actually, I see it's a catalyst that's gonna take Bitcoin. It's going to go even higher, right? It's going to help Bitcoin toward mass adoption a lot faster, right? Because as now the fiat currency, what we're talking about, the fiat currency going digital is still a fiat currency, which means it's still controlled by the government. The government can still print out as many digital currency as they want, right? Their own currency, right? So it doesn't. Is it better for? Is it a good idea to do that? I think so, because then you don't have to carry a physical. Right? Like especially during this pandemic, nobody wanna touch cash.
They're like, no, don't give me cash. No.
So you have digital currency or fiat currency. It's fine. You can use it, electronically. But it doesn't. It's no way, shape, or form it threatens Bitcoin. Right, and it's totally from what Bitcoin is. Bitcoin is a total decentralized currency, which means it's people's currency. It's not controlled by the government. Right, their fiat, their own digital currency is still controlled by them. It's just digital. It's still the same thing. It does the same thing.
To that point, right? Not to cut you off, but I have a note here because when I first saw that article, I wrote a note. Look, so current money, right? Fiat money, government money, doesn't have a technology problem. In other words, Bitcoin and the blockchain being a new technology, right? So by the government adopting that technology to issue their money doesn't change anything, because their money doesn't have a technology problem. The money was already digital as it is. Like, yes, we have cash, but how many people really use cash, right? Most people, use a debit, credit card, Apple Pay, whatever, right? So it's not a technology. Government money have a monetary problem. It is a monetary problem. So by the government coming up with their own so-called digital currency or cryptocurrency doesn't solve the problem of them debasing the money, right? So you are, and the reason why I cut you off, because you're 100% correct. I had that note written down. It's not the technology that's wrong with government money. It's government money itself. So them making it digital or calling it crypto or whatever and having their own private blockchain doesn't change a thing.
Right. But it will help. It will help crypto.
Yes.
That's now people, a lot of people when we talk to prospects and tell them about what Bitcoin is and cryptocurrency, yes, they a lot of people still don't have any idea, right? So with this, yes, it will generate more people to talk about, more people to know about it, and more people to use it. So which is, of course, great for us, great for the people that believe in Bitcoin, the people that have Bitcoin. And yes, I truly believe in having some of your money, some of your asset in Bitcoin, right? And especially in Bitcoin mining, like what we do.
Absolutely. Right? That's the way to go. Dollar cost. Bitcoin mining is the best example of dollar cost averaging, right? Because every day you just keep collecting Bitcoin. Okay, so let's talk about another topic, right? So I have a topic here. I sent it to James, and it's basically saying, look, baby boomers are going to be in for a rude awakening, right? And I think what's going to happen is right now, there are a lot of people who are either retired or close to retirement, and their pension that they have worked for their entire life and is looking forward to enjoy when they retire, it's not going to be there, unfortunately. And if it's there, they may get 40% of what they were promised, if that much, maybe 50%, right?
Right.
And it's very unfortunate. And a lot of what we're doing right now in terms of our monetary policy, in terms of not just debasing the dollar, so when someone retire and end up being on a fixed income and the dollar is losing its value, that's going to be bad for them. But a lot of pension funds around the country are completely insolvent, to the point right now where, so for example, Illinois, their pension fund is in trouble. California pension fund is in trouble. Jersey pension fund is in trouble. And so now you have all these different states are looking to the federal government to bail them out. And so right now you have this push and pull in Congress because, one of the congressperson, Nancy Pelosi, she would like to get those states bailed out. But then on the other side of the aisle, you have the Republican Mitch McConnell, and he said, no, they need to file bankruptcy, right? So that's what's happening right now with a lot of pension funds in these different states. And unfortunately, and I really feel it, I really feel bad, but unfortunately, a lot of seniors who are currently retired or who's close to being retired, the pension that they're looking forward to getting, it's either not going to be there, you won't get anything, or you're going to get a fraction of what you were promised, and that's very unfortunate.
All right, and you're right, especially around during this time when these baby boomers are retiring or about to retire. Usually it's, and I hope they diversify their portfolio, right, and put something in some very safe assets. Usually the economy, there's always these it goes in cycles, right? You have expansion, and then of course you have kind of like a recession, right? So usually every 8 to 10 years, and we've been growing since 2009 to before this thing happened to now, to almost now, right? To 2020, beginning of 2020. So what we're talking about, 11 years of really great growth. Okay. And this is really the last leg of that growth, and we are probably heading for a recession, right? Now with this thing, with this pandemic, it just pushed it over quicker. Just make this recession is going to be probably worse, a lot worse, and a lot quicker than what everyone anticipated. So yes, so these baby boomers and people that are retiring, yes, you're right. It's going to hurt. All right. But James, can you pull up that article that I sent you earlier about with the stimulus package? What's going to happen? All right, there's only 3 things that's going to happen with all these money that are coming out from the government. One is, of course, deflation, right? And the other thing is staying the same, right? And the third way is inflation or hyperinflation.
Yeah.
Okay. So it's only 3 ways gonna go, and we know it's not going to stay the same. All right, that's for sure.
Nothing does.
Right. And especially with something like this, it's definitely not going to be the same. All right. So what you're seeing is deflation or hyperinflation. All right. And either one, if either hyperinflation or deflation, right, where should you go?
I said something last week, and I think that we could very, very well see like what we had back in the 70s. They had what we call a stagflation. So in other words, there are certain areas in the economy that was in the deflation where prices keep going down, prices are falling. But then there are certain areas in the economy where prices were going out of control. And so what happened is you get stuck. It's kind of like being stuck in a grinder, right? You have inflation and deflation at the same time. And that's why they come up with the term stagflation. So you may have rising prices, but high unemployment, right? Because normally if you have rising prices, then, people are working, they have money to spend, and the more money they have to spend, that's chasing all these different goods, drive the prices up.
Right.
But in those situations, what you end up having prices keep going up, but the unemployment also keeps going up. And so that's really that's a bad place to be. The country went through that in the 70s when they have a stagflation period, and it was terrible. People have to line up to get gas and stuff like that. So we could see something like that. But the overall picture is this. What's taking place right now, and The thing is, a lot of people are looking at what's going on, and we're looking at the coronavirus, and definitely the coronavirus is terrible. But you have to understand, the overall economy, the coronavirus did not cause the overall bad decisions that's been going on for all these years. Because when you think about it, the Feds were already in the market since September of last year, pumping money in what they call the overnight repo market, right? So the banking system was having some issues since September of last year, where the Fed had to step in, and they were pumping in over $60 billion a day into the banking system to keep afloat the overnight repo market. So the markets, the economy, if you will, was already teetering on some serious crisis. It just so happened that, yes, coronavirus comes in, and that's why you have the conspiracy theorists saying, was this planned? Because it was like, for them, it's too much of a coincidence. It's like perfect timing. Here we are, where the economy is about to go into a tailspin, and all of a sudden, coronavirus. So for them, it's like, wait a second, how does this happen? Like at a perfect time where they can actually blame the coronavirus for money printing and all that kind of stuff. So, we'll see how things play out. But that's kind of how I was looking at it.
I see. I don't see much of a stagflation.
Okay.
Right? Because back then, I don't think we have as many monetary policies as we do now.
That is true.
Easier to
that
control.
Is true.
And because of what's going on, and maybe we're doing too much, right? Pumping $3 trillion to over $2 trillion, right?
And that's just first phase. That's just phase one.
Right.
Yeah.
Right. We still expecting more trillions to come in.
Many more trillions.
So that means your purchasing power, your dollar last month is only worth 90 cents. Okay, your dollar last month is only worth 90 cents right now because there's so much money coming in. So I do see an inflation in that sense, in terms of the value of the dollars is losing its purchasing power. Okay, so what this article is talking about in that scenario, inflation, hyperinflation, there's only two safe havens to go. Right, traditionally the only safe haven there is gold. Right, you buy gold or silver. And now, but with gold, it's most of the time that you buy gold right now, it's also mostly paper. That's backing.
Yeah, it's not the real gold.
Not real gold.
Yeah, absolutely.
Right. To really buy the physical gold, it's I don't even know where you go to buy the physical gold. And also, if you have it, where do you put it?
Yeah.
All right. Where do you keep them? All right. So the other one is the gold 2.0, like he's talking about, the Bitcoin. All right, Bitcoin is really the new gold. Right, so with hyperinflation, these are the places that you go, gold and Bitcoin. These are the two places. All right, and in many countries already happened, and I think we talked about it last time. Venezuela. How do you pronounce
Venezuela?
That? Yes.
Yeah, that country.
That country. All right, that country went into hyperinflation.
Yeah.
And thank God they have Bitcoin. You can Google so many articles about what happened there. When they were going through the hyperinflation, and they were using Bitcoin as their currency.
Yeah,
that's what they were doing.
Yeah,
right.
Yeah,
and with this crisis, if this hyperinflation is going to happen, yes, your safe bet, it's gold and Bitcoin. Right. So
yeah, absolutely. And I shared this same sentiment last week. In terms of traditionally. Yes, gold was like the safe haven, but gold didn't have any competition, if you will, right? So that's all people knew was gold, and gold has been the safe haven for like 6,000 years, right?
Right.
And they didn't have anything, but technology. Technology is one of those things where time changes with technology, and technology changes with time, right? And so now, with the advancement of technology, now gold have a competition, which is Bitcoin. And so what's going to happen is, yes, traditionally people would run into gold, but now they're going to say, wait a second, we have something else, right? And then when you do a side-by-side comparison, then that's where Bitcoin beats out gold. Because if you're looking for a store of value, you're looking at gold, but then you have all the downside with gold. Where are you going to store it, like you just said, right? If you need to travel, if I need to go from here, to wherever, am I going to have bars of golds in my suitcase? I mean, so that's where now with something like Bitcoin, it gives people another option, which is not only another option, but a better option than gold as a safe haven or a store of value.
Right.
Yeah.
Right. We have a quick question on Facebook.
Okay.
From Ben, actually.
Ben Zhang.
Right. It's called the China chain. So he's talking about the digital yuan. With the mainstream adoption of technology, but still a copycat coin. All right. What's the pros and cons of that?
What, the Chinese digital currency?
Yes.
I mean,
I guess he's making a comment, or you're asking a question, Ben?
Yeah. I mean, right. The pros, so we're still in this system, right? So, for example, if the U.S. come up with its own digital currency, would we use it? Yeah, because we're in that system, but only as a necessity, right? But in terms of store value, right, and a safe haven, we're not going to be looking towards U.S. digital currency. But for convenience sake, yes, we'll use it, right? Because then you look at, okay, I can use this, or I can have paper money.
Right.
And, we talk about paper money, holding on to disease or whatever. So yes, for convenience sake, people will use it. But one of the arguments I was making last week is, look, be careful what you wish for when it comes to government digital money. Because I was saying to you, and you made a point, I said, look, you can get trapped into that system. In other words, if the money is digital, right, then you don't have much control over it anymore. It's not like Bitcoin where you control your own private wallet, right? And it's decentralized and no one can control it. But with a government digital currency, they control it. Right. You may have a wallet that you can store it in, but you don't control that wallet because you don't control the money. So I think with a government digital currency, you're going to lose a lot more freedom than you would.
Right.
Go ahead.
And even if you control that wallet, just the government can always print more. So
they can always print more, and they can just shut you off. For whatever reason. Let's say, I don't know, you did something that displeased the powers that be.
Right.
They can just shut you out of the system. Right.
Right. So
yes, will it provide some convenience? Absolutely. But in the overall scheme of things, is that what you're going to look to, as far as your future for a store of value and to protect yourself from inflation? Because even though it's digital, they can still put out more of it, right? What's to stop them? So yes, the only thing that I see with the government digital currency is that it'd be more convenient as I go about day to day buying stuff at the store or whatever. That's about it.
Right. And the pro of that, of course, is then you don't need to use cash.
Yeah,
right?
Yeah.
Everything is digital.
So other than that, I don't see any advantage to the government digital currency. The only advantage is that you don't have to use cash and be more convenient to go, for your daily activity. But that's all I'll be using it for.
Right. Okay. Yeah. And James, I guess someone, I think the other James want to know how much one gold bar is. Right, you can.
Well, it depends on
how big that bar is.
So you go by the price of ounce. Like 1 ounce right now, I think is like 1,700 and something.
Yeah.
So you can have a 10-ounce gold bar, or you can have a 100-ounce gold bar, or 1,000-ounce bar. So it's go by the ounce, and then a bar just depends on how much ounces is in the bar.
Right.
Yeah.
All right. So how much, James? You can put up the price of gold for an ounce.
Sure thing.
Yeah, so it really depends on how big that bar is.
Yeah.
Right. And also another thing that people told me about why gold is gold, and Bitcoin cannot be like gold is because gold you can use it for jewelry. Like gold is physical and you can use it for jewelry. But in terms of total supply of gold out there, right? How much of that gold is used for jewelry, right? How much of that is really used for jewelry, and how much is it to store by the government or by people for a storage of value?
Yeah.
Right. I can bet you most of the gold it's stored in, like what James was asking, in bars.
Yeah.
Right. In bullions and bars and
in some vault somewhere.
Yeah, right. And some coins.
Yeah.
Okay. Not in some fancy jewelries. Yes, there are some that are being used as jewelries, but that is not the main thing, and that is not the main thing that caused the value of gold to be, to be that much.
Yeah.
Right.
It's not jewelry that dictates the price of gold. It's not because people needed to make gold chains and rings and whatnot. I mean, yes, it's used for that, but people used to buy gold because for the simple fact that they see it as a store of value. I mean, and that's pretty much the long and short of it. Yes, some people use it for jewelry, but that's not the main purpose of it. And like I said, the thing with gold, it's always been viewed as a store of value, a safe haven, because there were no Bitcoin. But now that Bitcoin is here, when you look at all the properties and all the advantage of Bitcoin and all the advantages that Bitcoin has over gold, it's really like a no-brainer.
All right. And gold is at $1,714.
Okay.
Per ounce.
Yeah.
Right. And actually, gold is down a little bit. Right? It's down 0.65%, by 0.5%. Right.
Okay.
All right. So that's about.
Yeah. That's about it for today. Once again, thank you guys for being here with us. We really appreciate it always. And we'll be back here again on Friday at 5:30 the same time for another live stream. But don't forget, we're having our training tomorrow at 7:30 for our guests and also for members. I think our CEO is training tomorrow.
Oh, yes. Right? Actually, yes. So we have a very special guest tomorrow, special trainer. So Don, our CEO, will be training tomorrow.
Yes. Okay. And for those of you who are members, don't forget we're having our compensation webinar tonight at 9 p.m. Make sure you guys are on for that. And, so look, once again, thank you guys so much. Really appreciate it. We love and appreciate all of you guys. And, hopefully, once this is all over, we can get back together and do our regular thing and see you guys, that I haven't seen in so long.
Yes.
But in the meantime, you guys have a wonderful evening. Want to say something?
And catch us at the next podcast on Friday. And hopefully by Friday, it will be above 8,000.
Oh, that'd be sweet. Can you imagine that?
It's very close. Awesome. We're already at 77, 7,800 already.
I know.
Right, so let's hit 8,000.
Okay. All right, you guys hang in there. Take care of yourselves. Take care of each other. And we'll see most of you guys tomorrow at 7:30. And then again, Friday at 5:30. Okay, you guys take care.
All right.
See you guys later.
Thank you, guys. Peace.